What is going on, Alpha Hunters? The markets are closed for the week of July the 12th. And what a way to end out the week we had. Let's get into it. Monday, nice little gap up. We didn't do too much actually Monday, Tuesday, but we did have a little bit of a gap up there on Monday and kind of just steadily kind of pulled back throughout the day. Nice little pump there towards the end of the day. Ended positive. Tuesday, nice little gap up. Not too much kind of went on that day. A little bit of a kind of a pullback day. Not too much. Still actually ended positive just because we gapped up enough. But yeah, Monday, Tuesday, intraday, not much. They were really small days. And then actually Wednesday, we had gapped up. And we weren't really doing much on Wednesday either until basically got to about when we were live streaming on the channel. And it about that time, man, it just started lifting off and just took off. And we actually ended up like 1% across, these five ETFs about. Not all of them were up 1%, but they were all up pretty good that day. And then we got to Thursday. We got to inflation data Thursday and Friday. We'll talk about that after we talk about Friday. A little bit of a gap there, not much of one. A little bit of a pump there in the first 30 minutes or so. And then it sold down pretty good. We'll take a look at the Qs after this as well. Qs sold off a little bit over 2%, like 2.2%. To end out the day. And yeah, tech got hit pretty hard. You can see though, we kind of based here as the second half of the day. Friday, nice little gap up, ran after we got PPI data, pulled back and then pushed. And then we got to the last hour of the day and we just saw a big old drop. And during the week, Thursday was a pretty important day because we saw some significant selling on Thursday. Okay. And then we'll get into how this kind of looks on the daily picture. But then Friday, when we were on the live stream, it was like, if we wind up turning back over and selling back down, that's not going to look great at all. But I mean, we wound up pushing even higher in all-time highs here on Friday afternoon. But the interesting thing was what we were talking about on the live stream was if we continue to make new highs here on the SPY, and the Qs did not. And you'll see why here in a second, because the Qs got hit so hard on Thursday that they were not even close to getting back up to their like Thursday all-time high numbers. So yeah, we'll take a look at that here in a second. Let's just take a look at some of the economic data that we got this week. Thursday morning, we did get CPI. You might have heard about it. Inflation rate did come in at 3%. Forecast is calling for 3.1% and 3.3% prior. So, okay, there you go. Core inflation rate actually did come down a little bit as well, 3.3%. Forecast is calling for 3.4%. Prior was also 3.4%. The jobless claims, this is a little bit more of the shocking number, came in at 222K. Forecast is calling for 236K. And prior came in at 239K. So yeah, pretty good drop there on initial jobless claims. It's kind of interesting that we did drop that much. See if that happens again next week. But then we get to Friday, and we got PPI. PPI year over year came in at 2.6%, which is up pretty good from what was prior, which was 2.4%. And then forecast is calling for a reduction actually at 2.3%. So kind of interesting there. And even core PPI came in at 3%. Forecast is calling for 2.5% with prior at 2.6%. So yeah, there was, CPI was looking good. Jobs data Thursday morning also looking good. And then we get to Friday, PPI shows that maybe inflation's not going away. And real quick, let's just take a look at the Qs intraday. You can see what I was kind of talking about with the Qs and how much they got hit on Thursday. I mean, they got absolutely slaughtered. And you can see they did run pretty good. I mean, they were kind of outpacing the SPY a little bit, kind of up until this afternoon time period. But since they got hit so hard with the sell-off there on Thursday, they did not make it close back to that high that we had on Thursday. And then they led the sell-off here at the end of the day in that last hour. The Qs got hit real hard again. So we'll talk about that later. All right, taking a look at sector rotation for the week. And yeah, we can see the XLC kind of at the lower end. Staples also a little bit underperforming there, as well as tech and energies underperforming for the week. Outperformers for the week, discretionaries, XLY, doing pretty good there. Financials, industrials, healthcare, materials, utilities, and real estate up at the higher end. Real estate had a really good day on Thursday, mostly because when we got the data that we did on Thursday, yields dropped off, dollar dropped off, and real estate XLRE rebounded very nicely from those happening. All right, quick look at the VIX. Not really doing a whole lot, just hanging out in the lower teens. Could stay down there for a little while. DXY. Okay, so dollar dropped off pretty significantly there on Thursday. So we got the clear answer here that, the move that we had in the beginning part of July, was just a quick, sharp pullback, and we're going to continue to bounce like we did throughout June. Well, I would say no. It looks very much like we might be going lower. The thing to know right now, I wouldn't be taking any positions, right? We are sitting right on top of a support level. You could try to go bullish. You could. I don't know if I would want to, but it is sitting right on top of a support level we had bounced before. The interesting thing is where we are right here, right now. Yeah, I mean, you could probably just get in. If we want to break it down, you're just going to close out on the retest and then look to probably just flip your position, maybe even take it bearish. But you don't have to do anything right now. You can just wait, and we'll see what we get when we get it. GLD, Gold Trust, bounced very nicely on Thursday. Friday, not so much, which was kind of interesting. But yeah, this thing looks really solid, guys. I mean, it looks super solid to probably continue higher. I would expect it probably continues higher for the next, at least throughout the end of July, but we'll see. Definitely next week looks pretty good to probably at least continue to consolidate and push higher. But yeah, I think we've got that base that we kind of put in throughout June, and we're looking pretty good, guys. Take a look at yields, 10-year yield here, and we definitely got that breakdown there on Thursday. Kind of thought, hey, maybe this is a quick pullback, and maybe we'll see yields bounce to start the week and kind of continue. They tried a little bit there to start the week, hit these moving averages, more of consolidated Monday, Tuesday, and Wednesday. And then obviously Thursday we got the data, which just broke down. So what are yields doing? Could be in a downtrend, definitely. But until we really snap off and break down with some acceleration, I would imagine we'd probably just be choppy. I wouldn't be surprised if we go a little bit lower on yields, but it might just be more choppy than anything else. And then taking a look at the 2-year, the 2-year's really dropped off here. So it is just the way it looks right now. So we're seeing some pretty good movement across the yield curve, and the 30-year's not even dropping off all at much. And yeah, so it's kind of interesting. The yield curve is, depending on where you look on the yield curve, things are moving a little bit differently. And taking a look here at the 10 and 2, and that kind of makes perfect sense, especially with taking a look at the 10 and 2. See the past 2 days, Thursday, Friday, yield curve looks to be moving up. HYG, the high yield corporate bonds, holding over 77.5, 2 days in a row. We are right at kind of the top of the year for the most part. So either you're probably going bearish right here, right now, or you're going to let it clear out, pop higher, make new highs, right? And then, get the pullback and then go bullish. Or if you go bearish, then, you let it pop higher, close out on the retest and flip your position, go bullish. Other than that, man, HYG, it is kind of looking good. Just we need to get this clearly broken above probably the 78 level. So get up to 78 and a half or higher. Probably look pretty good to be bullish on that. LQD, yep, starting to look somewhat decent as well. Those bonds breaking down this week. This doesn't look all that clean, like it wants to accelerate to the upside, and that's why I'm kind of hesitant on bonds. But they're trending higher. If we can continue to push higher, I just don't know how much more the yields would continue to push lower. And take a look at the TLT, not exactly breaking higher. Well, we didn't break the June high here, so I don't know, man. This one's kind of tough. So yeah, I'm not totally convinced. And one of the things that we kind of mentioned earlier, like Thursday and Friday, was if yields kind of turn around and start to go bullish and then bonds start to go bearish, that's investors making decisions. So they've gotten the data that says that yields should go lower and bonds should go higher. So if that doesn't happen, that means investors are starting to clamor for higher bond returns, which would not be a good thing at all for any markets. And take a look at the CME FedWatch tool. And really, we are expecting to have, or the market's expecting to have a Fed rate cut in September, November, and December. So they're expecting a quarter point rate cut in September, November, and December. July looks like it'll just be a hold. I mean, the market's expecting that. It's pretty much a 93% probability for now. So, yeah, don't expect much for July, but the next three after that to end out the year would be the market's expecting cuts. All right, take a look at the IYT. The IYT, which has not been doing well really over the past couple months, has trying to base here in this 64 to 66 kind of range. It had a very nice strong day Thursday. Just about everything did, or a lot of things did. I'm sorry, a lot of things did on Thursday. Not everything. It was Wednesday I was thinking of, but Friday, nice little upper wick trying to break these, past month of highs, and we did not hold. So that'll be interesting. Kind of something to keep your eye on, but this has definitely been a weak area in the market. And, if this is the area where that transports your economic activity, then, you want to see the IYT and transport ETFs kind of start to get it going here. And take a look at the RSP, Eagle Weight SP 500. We did not make it up to that high of beginning of April, end of March there. Almost did, but nice little upper wick there to come back down and sell down towards the end of the day. Look at the volume that came in on Thursday and Friday. Woo! A lot of volume there. So we've kind of been talking about, man, just the RSP's just been flatlining, doing nothing, just getting super compressed in here. And then that started that move Wednesday, and it just continued Thursday, Friday, all the way into the afternoon until that last hour there on Friday and came right back down. So RSP, I think, would be the area to me that you would probably want to be in, the RSP and the IWM. We'll get there in a second, but I think those would be the areas. I think you'd want to stay away from big tech. I think you want to continue to stay away from kind of those hyper inflated areas. The DIA did not hold all-time highs today, even though we did get up there and snag all-time highs, but it did not hold. It is the highest close. Today is the highest close for the DIA, but it did not hold over the wicks. So, it's the highest closing high the DIA and Dow Jones has put in. So it's not all bad. But yeah, I mean, we kind of talked about this last week. Starting to look pretty good here. Got to like, the nice little lower wick that we threw in last Friday. Nice little close at the top on Friday last week. Yeah, I liked it. We tried to push Monday, came right back down to the moving averages, and then pushed really strong on Wednesday. Without a doubt, we were going higher. Thursday, kind of a indecision day, and then Friday continued higher. I don't have any reason why the DIA probably doesn't continue higher. I mean, it looks somewhat decent, unless like big tech starts to really get trashed and everybody starts to freak out. Even that, I don't think that's gonna. That might be a little bit further down the line, kind of thing. IWM Russell 2000 ETF. Nice upper wick there today, but it had a pretty good gap up to start the day, so it did end Friday on up 1%. I mean, it's a pretty solid move there. It is a breakout for the year. That is definitely the year trading high, but we coming into a lot of lows that we were putting in from 2021 that we've had a hard time kind of getting through. So when we were talking about this on the live stream on Friday, kind of mentioning, hey, be real careful about being bullish here now. I mean, we've moved very rapidly past like 2 days. Can definitely see a breather happen at any moment. And, that's kind of what you want to see. You want to see kind of how things set up. Where do we kind of pull back to? Where would you be more comfortable getting bullish in? Around 209.5, 210. Not too bad. It'll be a little bit lower than where we are now. So, yeah, the IWM starting to look pretty good. Obviously, we got a pretty big breakout. We've kind of talked about this pennant pattern that we formed out here over 7 months or so. And yeah, it looks pretty good. I think IWM, RSP are finally waking up, and maybe rotation is going to be coming out of tech. Speaking of tech and those Qs, this is how it looks on the daily. And you can see just how much we got smashed on Thursday. Pretty good volume that came in on Thursday as well. Came all the way down to that 10 EMA. We ended the day down 2.2%. So we did try to bounce. You see that upper wick that formed from that last 1 hour sell down. Be curious to see what happens. Be curious to see what happens next week. you are going to have a lot of stop losses right under Thursday's low. So if we get below that, especially if we close below that, we're probably going to be due for quite a substantial more pullback. We'll address that if that happens, but I wouldn't be shocked to see if we actually close below that Thursday low that hey, selling's on, because we were negative. We ended the week negative on the Qs. You don't realize that. If you go to a weekly, that's a negative week there on the Q. That's how much Thursday really got hit. SPY did have a positive week, and it did try to hold, that push higher, getting over Thursday's high on Friday, a little bit of upper wick, but it came back down. And so we do have that switch, right? That switch that we talked about where you got lower highs on the Qs. Obviously, you can see that the Qs did not make it above Thursday's high. SPY did. So, yeah, it's going to be really tough to see that the SPY doesn't go in the same direction as the Qs. I mean, the Qs is the largest weighting in both of them they're in both, right? Your Apples, your Microsofts, your Nvidias, Alphabets, Metas, Amazon. So it's going to be really tough to see the SPY go anywhere in like an opposite direction of the Qs. And I think what we've kind of been talking about, like I would be pulling it back from tech for a good amount of time. Like I think there's just so much capital wrapped up in those areas that it can start getting pulled and reinvested in other areas, or people just get really protective and just pull it totally. And either way, I think pulling it back from big tech is probably just a smart way to go. Alpha owners, have a great weekend. Take care.